All right, so this one's going to be a fun one. I'm going to call this utility sector analysis, just because we're looking at four different companies within the utility sector, and very comparable. All but one of these serves pretty much the same market. I think Cheniere Energy is not actually sorry, CNP, CenterPoint. That's right, CenterPoint. I think it's the only one that serves the Midwest versus the South. So again, these are going to be very comparable. And currently, the program is calling for ETR. We're currently in Excel Energy, so let's kind of see what's up. So right away, we see that FE has the large dividend. I think that's significant in this case, being that it's almost double what CNP and Excel Energy is. Uh, but definitely not there. All right, so the PE is going to be about the same across the board. Excel Energy is but I can tell you historically that has almost always been the case. Excel Energy has always been a high return growth company compared to the rest of the utility sector. So that's really good to see that all these guys are really in line as far as price to earnings goes. Let's see here. Net profit, again, pretty much all in line. FE, beats them out by a little bit, but for the most part, they're pretty much all returning the same thing. Return on assets, again, same thing. ETR has a lot more cash on hand. I did talk about this in a couple videos a while back when we kind of reshuffled our basket of stocks. For whatever reason, the companies with the most cash on hand actually performed a little bit better compared to the rest of the market. So that's definitely something that I'll look at. Cash to debt, Excel Energy, best everyone. But again, I would say they're pretty much all comparable. ETR and FE has a bit more debt. That may just be a timing issue, honestly, not even a management thing, just kind of where they are in their debt cycle. I think this is really important, though. I mean, this is a huge difference, right? There's a 4% short interest on CenterPoint and a 4% short interest on First, and so that means that against these guys pretty heavily compared to what we've seen. See, everyone is a little bit off their 52-week high. Not much. Looks like Excel Energy is actually lower than the rest of these guys. And looks like everyone is off of their lows. FE more than anyone. Let's see, alpha is something I'm really interested in. Looks like FE has a better alpha even than Excel Energy. So I think there's something to be said about that. But ETR is not far behind. CP is way down on, which is kind of weird considering that its average return has been so good. But again, I think that's because the more defensive companies have performed the best over the last 12 months. Up moves, looks like ETR beats out everyone. Excel Energy is right there with them though. So that's encouraging to see, especially because ETR is the defensive play that the program is calling for. But you see that it does have this really decent alpha and return. See down moves. Again, like I said before, it confuses even me every time I look at this. But for the down moves, the lower score is the better score. All right, the lower score is the better score, and so we see CNP is way up there. So definitely not going to be top of the list. ETR, of course, beats out everyone, followed by L Energy. This is interesting. So ETR has a better beta too, and we saw that looking at the previous portfolio performances over the last couple months. Those beta portfolios have done fairly well. And then, of course, we have the average monthly return. Uh, FE and Excel Energy leads the way, but again, ETR right there with them. So that's really interesting. So with ETR, it looks like we're getting that straight up defensive play, but also with quite a bit of alpha and growth thrown in there. Now, because of that growth and that alpha, of course, the volatility is going to be a bit higher. So that's something to look at. And then, of course, we have the management score down here, which takes into what's the word I'm looking for. Anyway, it scores it based on again cash on hand, debt, and the current ratio, and so it blows everyone out of the water there. So, so easy decision to make. ETR is definitely where we want to go. Again, I've seen them around. I don't know the ins and outs of ETR, so I'm really interested to learning more about the company and seeing where it can take us.